Good morning. My name is Dr. Pascal Koku Adalessossi. I'm a PhD holder in finance. I'm also a consultant and an expert uh, in entrepreneurship and projects. I am also a researcher in finance field. I used to do researches on financial institution, financial markets, and on some companies. Particularly small and medium enterprises. I present a video concerning the importance of bank in a state economic. And I want to summarize it in English. So the video that I have presented in French. You know that bank play a key role in a state's economic. In other words, banks play a vital role in state economy. It's used to channel main resources toward the potential growth sector of the country. And it's used to finance some economic agents such as households, enterprises, and some public collectivity. Even a state, sometimes bank used to grant a credit to the state. And the bank used to develop some different kind of products across a region or across a state in which they are operated. So among those kinds of economic agents, you can mention enterprise. So among those kind of agents, you can mention companies. When bank grants a credit to a company, this help the company to to produce. By producing, this will increase the national production. When this meets an adequate demand, it will help to increase the GDP growth. In other words, it will help to increase the state economy growth. We know that banks have three main type of service. You have deposit collection. We have also payment service, and we have loan payments, loan service, like bank used to grant credits or grant loan to the agent that we have mentioned later. Now we want to talk a little bit about the financial system. Financial system of a country, it's composed of a financial markets and financial institution. Among the financial institution, bank remain the most institution that play financial intermediation role. It's a bank that play that role. So that is very, very crucial. When I want to get or I want to give an example, when we consider the West African Union Economic Monetary Union Zone, the financial system is based on bank system. Despite that, we have a financial market name in French Bourse Régionale des Valeurs Mobilières, where its headquarters is in Abidjan. The financial system of the Union Zone is based particularly on banks. These financial markets, which have been created in 1994, till now only 40 companies has a list on these financial markets. And a lot of small and medium businesses encounter a lot of problem of financing, so they cannot get financing on the regional stock markets. In another video, I will develop these points very well. And also we know that in West African Economic and the Monetary Union Zone, we have around 100 banks. And the rates of penetration is very low in this area. It means that financial inclusion is in his low level, but I will talk about it also in another video. For our subjects, what are the points that I want to focus for this video? These points are as follow. Why do we need bank? What are the type of banks? What are the function of the commercial banks? What is the banking business line? Why banks are supervised? How banks are supervised? What is the important regulatory ratios, or what are the important regulatory ratios? And at the end, we will mention the various products that develop banks. We are going to start for the first point. For the first point, we are going to mention the different functions that banks assume in order to play its key role in a state economy. These functions are financial intermediation, asset transformation, mismatch transformation, risk transformation, pump of a fuel to the economy, and the creation of the money. Briefly, these are the functions on which we are going to talk. Concerning financial intermediation, bank is the one which play this role, or who assume this function. For example, if I deposit, or if I need the money, I have to go to the bank, because God has collected money from some people who have a surplus of funds. So bank used to gather two agents, the one who has a surplus of funds, the one who is in a need of funds. So bank used to bring together this kind of agents. He take money from the one who has a surplus and they give it to give it in a form of a loan to the one who is in need. Briefly, this we can call financial intermediation. For the second point, asset transformation. We have two kinds of assets. We have real assets, such as building, machine, plants, cars, and so on. We have also a financial asset. Financial assets such as bonds, share, assurance, insurance, and so on. So the asset transformation, it means that bank can transform illiquid asset to liquid asset, and liquid asset to illiquid asset. For example, when I want to buy a car, I have to go, or if I want to build a house, I have to go to the bank to look for a loan. When bank give me money, this money is a financial asset. So I will use this money to buy a car or to build my house. You see what I mean? In the other part, when bank give loan to its clients, but when the client defaults or are not paying the money, bank can ask the client to sell its guarantee. Guarantee can be a car, guarantee can be a house. When the client sells the house in order to pay back the money you own to the bank, you see it is also the sale of the house is a real asset, and when you sell it, you get money, which is financial asset. So is the bank which play or which assume this type of function. We have also mismatch transformation. How do we mean by mismatch transformation? For example, if I deposit $5,000 like time deposit, uh, which will last for 5 years, or I mean which that the maturity is 5 years. But when another person come to the bank, he want to borrow money from the bank, borrow 5,000 for 15 years. So it's I can say it's a mortgage loan. You want mortgage loan. So bank will use my money to grant him as a loan. But at the end of my maturity, of the maturity, the bank will collect money from another agent to pay back my money. So bank is the one which can play this mismatch transformation role. we call it is a time mismatch transformation based on time. Another mismatch transformation is that I deposit 10,000 in a bank, and another agent come to the bank and they want to borrow $15,000 for the bank. Bank will collect 5,000 from another agent to add to my 10,000 and they give it back to the one who asked for money for loan. So we call it transaction value. So the mismatch is based on time and also on transaction value. So it's the bank who play this role, or which assume this function. Also, bank play also the risk transformation role. When a depositor deposit money in the bank, so when the bank take this deposit, is a risk. So the deposit is transfer the risk on the bank, and also bank takes this deposit and offer it as a loan to those who need that money. It's a risk when those who has taken loan from the bank default. So it means that if they cannot pay back the money, but the bank is in obligation to pay back the one who has deposited his money in the bank. So it's a risk that bank take. It's only the bank which can play this role by transform the risk. Is accept to take a risk on behalf of the depositor, and they take the risk also to grant this deposit as a loan to other people. So that is very, very important. Also, we know that a bank constitutes a pump fuel to the economy. When we focus on the bank service payments, bank used to pay money across a country, across a region. So it's like a pump, which fuel or who send fuel to the economy. That is very, very important. For the last one is the creation of money. Bank create money by the game of scripture. In another video, we are going to develop this type of function of bank. So briefly, it's what we can say about the first point. In our next video, we are going to develop the other points. So thank you very much. Goodbye.